right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. I'm happy to be here. Hopefully you are too. You got me now for the next 2 hours and 15 minutes, so take that for what it's worth, but we'll have some fun. We'll get this markets over to you so you know about where we've been, where we might be going. Why don't we start with corn? That'll be a good place to jump off in. And, well, that's not too good. We're down 5 cents basically across the board. 5 1/4-cent loss in the D's to 660.5. But March is down 4 3/4 to 664 3/4. May down a nickel to 663. If we go to see what the beans have been doing, they've been a little bit stronger as of late. They've had their own little script that they've been trading off of. They've given back a lot of their gains. We were about 15 cents higher than this earlier, but let's take a look at it. We're Jan's up 3.5 cents now, 14.63 even as last. March is up 2.5 cents to 14.68.5. But look at that, March was up around 14.84 earlier, so it's definitely given back some real estate here. But we'll take it. It's got a green on the screen, right? Wheat in Chicago, the Chicago wheat market. That's a little bit better. 6.5 cents in the D's added on to that price. 7.64 1/4 last. March is up 7 cents to 7.88.5. If we move over to take a look at the hard red wheat in Kansas City, the old HRW down in KC, that's up as well. D's is up 3 1/4 to 9.04 1/4. But we've got March and May also higher. March by 6 1/4 cents to 8.93 1/4. May by 5 1/4 cents up to 8.85.5. All right. Spring wheat, not so good, right? Spring wheat's got a gain in the D's up a nickel, 9.45 1/4, but everything else is off. 3 cents lower in the March to 9.31.5, and May's down 2 3/4 cents to 9.29 3/4. Then finally, we want to take a look at cotton because this one is doing okay today. 390-point gain in the D's to 85.50, but look at the March behind it, 254 points, now 239 points to 83 even. So some pretty good going when we talk about cotton. Let's bring in our next guest, analyst Ryan Kelbrants from CHS. He's some pretty good going himself. Ryan, what's going on in the energy sector?
You know, EIA came out a little over an hour ago. I think that the major factor today is that the U.S. crude inventories dropped 12.5 million barrels last week. So that's the biggest weekly decline since 2019. So refinery rates are up there. They were up 1.3% to 95.2. Taking a look at the ethanol numbers, production was down just 23,000 barrels a day at 1.018 million barrels. Stocks were up a little over 100,000 barrels at 22.9 million. Demand was up about 5,000 barrels a day at 891. So gasoline demand took a little bit of a tick lower at 8.317 million barrels a day. The 4-week average is about 8.599. So U.S. did announce a daily export sale this morning of 136,000 beans to China for 22-23. So that's a positive, and I think that's helping out beans. And I think that the strong crude oil, we got crude oil up $2.30 a barrel, basis the January contract at 80.50. So trading above that $80 level. Domestic demand for beans remains pretty good. Basis levels are strong. River levels continue to be a concern. We're going to take a look at the latest drought monitor tomorrow morning, along with weekly export sales. But many of the areas in the U.S. remain dry. So we could see some decent export sales on beans tomorrow, some good numbers there. And then we're going to wait for December 9th, where the USDA is going to come up with their next S&D and crop production numbers.
Yeah, you know, it's that time of year that folks think that we can start to take that glide path into the end of the year. But, you know, we still have a ton of economic data still coming out. I mean, today we had a lot. We've got a lot tomorrow and Friday, not all centered on ags, but a lot of it can affect the ags, right? We've got to listen to what Jay Powell's got to say this afternoon up at the Brookings Institute and what that might do to inflation and interest rates, and then how that flows down into corn, wheat, beans, and everything else. So there's a ton out there. You covered a lot, and I think that going forward, this is not going to be, you know, we used to trade on an 11-month year, and we used to think that December was going to be slow. Nobody did anything, but I don't think that's going to be the case this year. So I appreciate all that stuff. Yeah, I appreciate all that stuff. Great economic data. Ryan Kelbrants from CHS coming to us up from Inver Grove Heights in Minnesota. We're going to go away. We're going to pay some bills, and then we're going to come back, and I'll talk livestock with you after this.